Welcome to the Environmental Crimes Financial Toolkit podcast, where we explore the fastest growing threats at the intersection of environmental destruction and financial crime. Environmental crimes, illegal logging, wildlife trafficking, illegal mining, and other offences, generate hundreds of billions of dollars annually. These aren't just conservation issues. They're sophisticated financial crime operations involving money laundering, corruption, and transnational organised crime networks that move illicit proceeds through the global financial system. This podcast series brings together the people on the front lines of this fight: financial crime experts, environmental investigators, law enforcement officials, regulators, and banking practitioners. Together, we'll examine how environmental crimes actually work as financial operations, what red flags financial institutions should watch out for, and how better collaboration between sectors can disrupt these networks. Whether you're a compliance professional trying to understand environmental crime risks, a regulator developing policy, or simply interested in how financial systems enable and can help stop environmental destruction, this series will give you practical insights and real-world perspectives. I'm Olivia Dakeen, and this is the Environmental Crimes Financial Toolkit podcast. Today, we're focusing on one of the most serious intersections between environmental crime, financial crime, and human rights violations: conflict minerals. My guest is Sasha Lezhnev, Senior Policy Advisor at the Sentry, where he leads engagement on conflict gold and minerals in the Democratic Republic of Congo. Sasha has spent his career at this intersection. He's founding director of the Grassroots Reconciliation Group, which has helped rehabilitate over 2,500 former child soldiers. He was previously at the Enough Project and Global Witness, and he's the author of Crafting Peace: Strategies to Deal with Warlords in Collapsing States. He holds a Master's in International Relations from Cambridge University and a BS in Foreign Service from Georgetown University. Sasha, welcome to the podcast. So, Sasha, let's start with fundamentals. The term conflict minerals gets used a lot, but I want to make sure that our listeners really do understand what we're talking about here. So, drawing from your experiences in investigation, what are conflict minerals and why does the Democratic Republic of Congo matter so much to this issue?
Yeah, thanks so much for having me on. I'm really excited to be here. And this is a very hot topic, especially with all the particularly U.S. attention on Democratic Republic of Congo following the Rwandan invasion that really escalated last year, and all kinds of minerals deals and critical minerals and initiatives on gold and the price of gold rising. So there's all kinds of interesting hooks that have been in the news lately. I mean, the war in the Eastern Democratic Republic of Congo has been going on for over 20 years now, very sadly, and over 5 million people have died during this war, mostly as a result of the forced displacement the fighting has caused and the terrible conditions that people are left to suffer from. Over 5 million people are still displaced from their homes right now in eastern Congo, and there was over 1 million people that were displaced newly just last year. Just a year ago, also, Rwanda significantly escalated its involvement in the conflict. It has 5,000 to 7,000 troops in eastern DRC, almost similar to the Russian invasion of Ukraine. And it also sponsors, when I say sponsor, like it arms and has full command and control over a major rebel group called the M23. And one of the cores of this deadly war has been natural resources, in particular minerals. I think it's no accident that the skyrocketing price of gold has also coincided with escalating conflict in eastern Congo. Rwanda is exporting record amounts of gold. It increased its gold exports over the past 4 years by fivefold, from about $360 million a year to over $2 billion last year. And the rebel group that it controls, the M23, has taken control over a number of gold mines, as well as other critical minerals mines, and most particularly tantalum and tin. Tantalum known more regionally as coltan or columbite tantalum. Rwanda has some of its own minerals mines, not so much gold, but tantalum, tin, tungsten, but it exports far more than it produces internally in the country. They set up a pretty large, for the region, gold refinery with the assistance of Belgian minerals dealer, and kicked out the Belgian dealer and been essentially laundering conflict gold from that refinery. It's called Gasabo, and it was sanctioned by the European Union a year ago, just about a year ago, for exporting this conflict gold. So there's about 6 kind of main steps between the conflict minerals mines and the end products that the minerals go into, which are electronics, jewelry, and gold for investment. The first step are the mines themselves and their armed groups, both the Rwandan-backed ones as well as armed groups that are backed by the Congolese government that control a number of different mines. There are kind of about 15 major mines and then hundreds of other much smaller mines. There's a couple of industrial mines in eastern DRC, but almost all of them are actually artisanal or small scale, meaning people are digging with pickaxes and shovels and so forth, and the armed groups basically profit from either taxing the miners or taxing the traders. Usually the armed groups themselves are not mining themselves. And I personally have been to many of these mines myself. One time we were at a mine that was controlled by an armed group, and a rival armed group came and attacked, and so we had to flee. Thankfully, I was safe, but it was quite a hairy journey with people firing guns and rocket-propelled grenades, etc. So then from the mines themselves, the minerals go mostly to local trading houses. So there's a couple of major towns and cities in eastern Congo: Goma, Bukavu, Beni, Butembo are the main ones. And so these minerals will get processed in these towns. Some of them go directly to Rwanda, or in the case of some of the gold also goes to Uganda. And so there'll be rudimentary processing there. When I say rudimentary, it's not like the gold, for example, is not refined to London standards, the 4 nines, but it does get refined there. And then third step is usually the minerals entering exporters. So that's when there's more refining, and those minerals are exported. So Rwanda, for example, exports much more tin, tantalum, and tungsten than it produces. It almost all of the gold that it exports, as I said, about $2 billion worth last year. None of this is produced in Rwanda, but then it gets labeled or relabeled as locally produced and then laundered into the global system. Then you have refiners that are processing these minerals more globally. So almost all the gold goes to Dubai, to the United Arab Emirates, and is sold in the local markets and then gets refined by refiners that are based there. There have been several that have been sanctioned or busted as part of international investigations. And the other minerals are processed mostly in Southeast Asia, so Thailand, Malaysia in particular. There's a few other locations. And then it goes on to component. So for the tantalum and tin and tungsten, there's a component manufacturer that who's making circuit boards, who's making chips, etc., for use in your phones, in your video game systems, and your TVs and your laptops. A big percentage of tin is used as a solder, so it's all over circuit boards. Gold is used as a connector, but it's largely used in jewelry and now increasingly in investment. And tungsten is used in a variety of purposes, but also in electronics, light bulbs, and defense uses. And tantalum is used a lot on the circuit boards and is oftentimes a capacitor. It stores electricity. So if you need to, perform some function on your phone, it's usually tantalum that stores that electricity. It's very efficient use. It also has military purposes. So that's kind of the general situation with the minerals and conflict. And just the last thing I would say is gold is the kind of the biggest, most profitable mineral for armed groups in the DRC, because it can be smuggled in a very high value very easily without detection. And so officially speaking, Congo produces almost no artisanal gold. There's a few industrial gold mines in other areas, not in the conflict zone. But then Uganda, Rwanda, in particular, are exporting very large amounts of gold that they do not produce.
Amazing. Thank you. That's a really, really good background. That's a bit about the kind of the ground reality. But if we talk about how this connects to the financial system, perhaps, I know that you investigate financial flows at the Sentry that are connected to conflict and corruption in Africa. how do conflict minerals move from mines controlled by armed groups into the legitimate global economy? So what does that supply chain look like, but also maybe those financial flows?
Yeah, great question. Very important. So I think the key terms to know or the key nodes of this network in terms of particularly gold, but also some of the other minerals as they flow from the illicit conflict areas to the legitimate global economy are number one, cash transactions, at number two, the US dollar, and number three, shell and front companies. So, and I guess fourthly, rudimentary or crude refiners. So I'll start with the last one. 20 years ago, the way how illicit gold flowed to global markets was through individual smugglers who brought it with them on planes in their pockets, in their briefcases, and carry-on luggage, etc., and then would take it to refiners, a lot of whom never ask any questions. And so you would get people smuggling gold directly to Antwerp, to Dubai, to Switzerland, other places. And that was something that was very common. Now you have an increasing number of companies that say, okay, let's set up refiners much closer to the source. So, for example, if there's conflict minerals in Sudan or the DRC, let's set up a refinery in Rwanda or Burundi or Uganda, and then have that refinery basically mask the origins of the dirty gold. And so they are taking this gold, almost largely doing almost all in cash transactions, and then they're laundering it to the global system. Now, the FATF put out a good report 11 years ago about this issue. It was sort of before these refineries were set up, but really identified some of these red flags of, was the gold produced in an environmentally damaging way? Was it produced legally or illegally? Are these smugglers using front companies? But, some of the gold trade has changed since then, and in particular with these crude refiners who then, take it to traders or bigger refineries in the UAE, India, Switzerland, and launder it that way because it's not coming from a red flag country. And so I think it'd be very important for the FATF to update its gold guidance and gold reporting so that all the financial institutions can really understand this issue better. I mean, the EU passed legislation requiring setup of a new list of what they're called CARAs, the conflict affected and high risk areas for sourcing minerals, which is out there, but it largely does not identify some of these middle tier countries like the UAE, like Rwanda, that are really the conduits for smuggling the illicit gold and minerals. So I think that's really important for financial institutions to watch out for and to do and enhance due diligence on these minerals. Likewise, places like the UAE don't have strict regulations on cash transactions. They still allow cash transactions up to very large amounts, and really have not properly implemented regulations on a lot of the dealers and gold importers that are bringing illicit gold into country. The UAE, for example, imported almost 1,400 tons of gold in 2024, which is going to be even higher when we look at the figures for 2025. That's 105 billion US dollars, now the second largest importer of gold. And yet so many of the companies that are doing this import are not properly regulated. So many of them are jewelry dealers in the UAE souks, the Dubai souk being the biggest one. And they're, the UAE is starting to actually require some of these institutions or the companies to file reports for the very first time. The reports are very mixed. And there's very little enforcement. And so, the US and UK began sanctioning a couple of the UAE gold dealers and jewelry dealers who were taking some conflict gold, particularly from Sudan. They put some sanctions on last year, but it's really a drop in the bucket until there's much more stringent monitoring and and enforcement of regulations in these global gold trading hubs.
So, as you mentioned previously, gold has obviously skyrocketed in price, and that is a really hot topic. So, maybe if we stick on the topic of financial institutions, but maybe expand a bit on gold as a conflict mineral, what is it that financial institutions should specifically understand about how conflict gold gets laundered into legitimate markets?
Yeah, I think conflict gold is really the new blood diamonds, and yet very few people know about this problem and the really the extent of the problem and the suffering that it's causing in different conflicts around the world, and how, what solutions to it really look like. I think everyone's just seeing this price of gold is now above $5,000 an ounce as skyrocketing, and maybe, hey, let's go and buy some gold as an investment. And yet I was at a conference recently and I asked one of the major banks, like, gosh, like the price of gold has doubled in the last couple of years. Does that mean the bank has doubled its compliance officers? And he looked at me like, actually, the compliance departments are shrinking everywhere. So this is a massive problem with the gold price skyrocketing so high. The incentive for miners, of course, is very high, but the incentive to smuggle, the incentive to go dig out gold in some of the world's worst areas has also skyrocketed. And so you're seeing the illicit mafia-like groups and armed groups in the Democratic Republic of Congo, in Venezuela and Colombia, in Sudan, in the Central African Republic, in South Sudan, as really scrambling to go find the gold and, pay off whoever needs to be paid off to secure it. Because it's so hugely profitable now. And then, as the other side of that coin, you have illicit groups and criminals who, want to launder their money through gold because everyone's trading it. And it's just such a big commodity right now. And the illicit flows are just increasing exponentially. And so, for example, you have Rwanda that has increased its gold exports by 5 times in 4 years. You have Uganda that also borders Democratic Republic of Congo that is home to sanctioned gold traders and others who've been named in UN investigative reports as dramatically exporting its gold exports. You have the UAE that is importing over 100 tons a year in gold, and really being a hub for smuggled gold, particularly from Africa, but also elsewhere. And so financial institutions are doing their some of their best on this, but this gold is really still flowing through. So how can we try to solve this problem? I think 3 main things are really important for governments and private sector to pay attention to. And I think there's a growing awareness of this. The UK launched a public-private partnership on illicit gold last year for companies and governments to try to coordinate a bit more. The gold industry itself has set up a more real-time monitoring system for tracking transactions. But this is really just the very beginning. And so I think the number one most important thing is for governments and industry to come together to set up an independent monitoring system to monitor and certify and in some cases decertify global gold trading centers according to the kind of anti-money laundering measures and traceability measures that can be done on illicit gold, that some places are required and other places are just not implementing at all. And this would kind of build on lessons from other commodities. So oil, gas, and minerals have the Extractive Industries Transparency Initiative, and there's a whole validation or invalidation system to check and monitor places that trade oil, gas, and minerals, and they can get certified or decertified. That's also the Kimberley process for diamonds. Similarly, has a system to independently monitor countries that are smuggling diamonds, and they're multi-stakeholder teams that go out there. So something like this really needs to be set up for these global gold trading centers, UAE, India, Hong Kong, other places. So there's no loopholes that somebody can just, go through. So if UAE suddenly blocks off all the illicit trade, then, Hong Kong can step up. No, this needs to be a global system. I think the second part is really much more robust public-private partnerships to share information on illicit actors, as well as support the legitimate artisanal gold trade. So right now, the sanctions bodies, the US OFAC and others around the world in the UK and the EU are really behind criminal element on this because so much of the real-time data about the gold smugglers lies with industry. And so there needs to be information shared and a mechanism to do that. There is such a thing called the FinCEN exchange that has been used in the past on all kinds of illicit actors between the US Treasury Department and banks. And so there should be a specific FinCEN exchange set up for gold and for NGOs such as our own and many others that have information to also share information and on these illicit actors, as well as, again, support the legitimate artisanal trade, because not artisanal does not mean criminal. There's a whole category. There's hundreds of thousands of miners worldwide that make a legitimate income from gold, and people want to just dehumanize them and criminalize them, but they need financial support, they need loans, they need microfinance, etc. And so I know that some of the gold industry, like the London Bullion Market Association, is trying to set up systems for supporting those legitimate artisanal miners, but that they can't just do it alone. This needs to be a bigger initiative. And then lastly, some specific reforms with partnerships with some of the more red flagged global gold trading centers. So for example, US and UK and EU customs partnerships with the UAE to really track and monitor, investigate, and prosecute gold traffickers that are bringing in illicit gold to the country. If you're bringing gold into the UAE, you are most definitely declaring it because there's no tax paid on it. And so UAE Customs has tons of records of where gold is coming from conflict and illicit areas, but they're not doing anything with this information. And so you have tons and tons of conflict gold coming in and then being laundered into UAE gold jewelers and refiners that is just and then exported and nothing's happening. So US and UK and other countries have done these partnerships with customs authorities and other places, and this is a real opportunity now, particularly with these new partnerships with Dubai, like for example the Silicon Partnership, to investigate and prosecute the criminal gold traders and financial institutions that are laundering this illicit gold that is frankly putting the financial institutions and the gold industry more globally at risk of purchasing and incorporating the illicit gold into their systems and into their financial flows.
Yeah, absolutely. I couldn't agree more. That's incredibly useful. Thank you. So we've talked about some of the solutions there and the things that might need to change. Maybe if we look at specifically what role you think financial institutions need to play really in order to kind of fundamentally break the link between minerals and conflict. Do you have any advice for them?
Yes, I think financial institutions really are the first port of call on. They play an absolutely critical role in being the front lines against or in the trade against conflict gold and conflict minerals in particular. I think regulators and sanctions bodies are definitely behind the curve, and financial institutions are the first ones to see and potentially block some of these transactions or conversely support the legitimate artisanal trade. So I think number one is really doing enhanced due diligence on gold transactions that are, outside the normal standard, from a large industrial mine to an LBMA refinery, and watching out in particular for two main things. Number one, cash transactions, and number two, flows from the second tier of country that is not the conflict country, but rather the country that is well known to smuggle the illicit gold or minerals. So, in the case of DRC conflict gold, we're talking about Uganda and Rwanda and the UAE. And the UAE really needs to be red flagged as a potential source of laundering. In the case of Sudan, you have Egypt, Chad, Ethiopia, South Sudan, even Uganda as places where these crude refiners are set up and importing these conflict gold. In the case of Venezuela, Colombia, of course, and Brazil as big smuggling hubs, as well as, frankly, South Florida. So, really digging into those secondary places that are not standard red flags, I think is really key. I think the other very relevant point for financial institutions right now is to reach out proactively, either through your industry association. So many financial institutions are part of the LBMA or the World Gold Council, or more directly to regulators and to collaborate, try to initiate these partnerships. For example, a FinCEN exchange. For example, the UK has this new public-private partnership. There needs to be one set up in the EU as well to really coordinate on the illicit flows and sharing of information. And I think thirdly, to set up programs to support the legitimate artisanal trade. The LBMA has this new program for this, the World Gold Council as well. There could be individual banks that can set up partnerships to promote this, because the more the problem is solved on the ground, the fewer illicit financial flows there will be. And so it's important to give microloans or small scale loans to groups of artisanal miners, provided the due diligence checks out on them, and to not blacklist people just because they say they're artisanal miners, because that's again just going to cause more of the gold flows to go to the illicit trade.
Yeah, absolutely. I couldn't agree more. So, Sasha, final question. What's the one message that you would like financial institutions to take away from this conversation? I know you've touched on a bit of it there, but if you could underline or stress one of them.
That illicit gold is the new blood diamonds, and this is a really important issue for compliance departments and for the C-suite to pay attention to. Otherwise, their reputations are risked.
Perfect. Thank you very much. Sasha Lezhnev, Senior Policy Advisor at the Sentry. Thank you for the work that you do and for sharing your insights with us today. For our listeners, the Sentry's investigations and reports are available at thesentry.org. If your institution is involved in mineral supply chains, either through financing, trade finance, or as a customer of companies in the sector, their resources on conflict minerals and due diligence really are essential reading. Next week, we'll be turning to deforestation in Malaysia and Papua New Guinea. We'll be speaking with Adam Farhan, Director of Rimba Watch, an environmental think tank, and Pamela Avusi, Coordinator for the Papua New Guinea Environmental Alliance. You can find more information about the Environmental Crimes Financial Toolkit at wearethemis.com/UK. Thanks for listening.